Okay, and we're live. Welcome, everybody, to another episode of Hymns Weekly. We are 1 week away from earnings, and so this episode we're going to do an earnings preview, predictions, talking about what we think is going to happen over the course of next week. Hymns reports earnings on Monday after the bell, I think it is.
Yes, it's
After the bell. And there's a lot that happened this quarter. So I got an extra large coffee, and Manuel's here to break it down with us. How's it going?
I'm fine, man. What about you?
It's going good. I'm currently exhausted because we did SoFi Weekly. We did the SoFi earnings call in the morning, and
Yeah. I
and
saw
that
it.
went in my time to 12:30 ish, and it's currently 7 a.m. for me.
How's
So
Japan?
Japan's good. Yeah, I have a lot of exploring to do today, but I have another podcast after this.
It's in the morning right now. There, right?
Yeah, exactly. It's 7 in the morning, sir.
Ah,
I
tough night.
thought I had to. I thought I was happy because I was like, okay, I avoided waking up early for SoFi earnings report. That's amazing. I don't like waking up early, and now I'm waking up early for this podcast. But it's great. I'm actually learning a lot on this podcast, whereas in the other one, it's mostly stuff that I already know.
Yeah, understandable. I mean, so far it's like your largest position. No,
And it's my second largest position. Yeah,
second. I always add
Tesla's
that
my
though.
largest. Yeah.
Tesla.
Yeah, I mean, Tesla was a position that I was adding consistently for years and years, and so
Mhm.
it just became my largest position.
Yeah, I see.
Nala, thank you for being here, sub and like. Currently building up my hymns position. Amazing. Okay, so where do we want to start? I think hymns was red today, right?
Yeah, it
Yeah.
was green during most of the day, but then it
It,
turned
it
red quite rapidly.
yeah, it just dropped really fast. Um, I want to share with you guys what I'm doing on hymns for earnings. I have a little earnings play, but maybe we want to start at the numbers. What do you think? Or do we want to maybe start there and then go to the numbers as more people come
I
in?
mean, for me,
I also
it's
got
okay
this
either way.
in Japan. It is like crack cocaine. It is bread and sugar, and it is absolutely amazing. So
Is
this
it?
for
I mean,
breakfast.
it doesn't
I have
seem
not
that
seen
good.
I have not seen a fat Japanese yet, but if I keep eating these, I will be the first. Um, so okay, let me just run through sort of my earnings play. So what I did was I sold covered calls on Tesla, and I closed off those covered calls before I went to bed last night, or I guess this morning. Um, yes, this made me laugh. And with part of that money, I bought calls for hymns for next Friday expiration date. Um, and that's like house money. It's like casino money, right? Like it's if it goes to zero, whatever, it goes to zero. But I don't think it's going to go to zero because I think that this earnings is going to be positive. I think Hims has the potential to make a somewhat violent move to the $25 range on the back of this earnings. So we'll see how that goes. I bought $24 calls expiring at the next Friday, basically. Um, so that's going to be exciting. How do you think that's going to go? You think that's going to zero?
I mean, I hope it turns out well for you. I think it kind of depends because last quarter everyone was very excited as well, and the earnings were very good, to be honest. But the
Mm-hmm.
stock ended up dipping because of other reasons, like the CEO comments about selling GLP-1s after shortage, as we talked about in the last episode. So
Yeah.
it's kind of difficult to predict at least what the stock is going to do because I believe the earnings will be good as always. Like I don't remember a single quarter like with bad earnings from him, so I'm not expecting differently. But the
Right.
stock is always like very unpredictable. I think over the past years there were more quarters with good earnings and the stock falling than like the inverse. But
Well,
now, like now, Hims has a huge community of retail investors, so it's really not the same as when it was in the single digits. Because when it was in the single digits, sorry, it would always fall after a huge earnings report, always like, and huge drops. So now it's
hmm.
really unpredictable.
Well, yeah, I think for this there is some maneuverability. Like if we open tomorrow and this thing goes to like 23.50, I can always sell and book a gain. Like anything above 23, basically, if we hit it this week, I'll still be in the green. So I don't know. We'll see.
I'm
Um,
confident, I mean, but it's always tricky with Hims.
yeah, look on the bright side. We're gonna have another chance to buy him cheap now that Tevis has played the calls. This is correct. Now you guys are learning. This is why you watch the show, to learn what you shouldn't do.
Inverse Tevis.
Yes, exactly. Okay, I want to throw up this screen, and I'm only working on one screen here, so I won't be able to see. So you just have to confirm for me. Present share screen. This. All right. Can you see this?
Yeah.
Okay. This was a press release from August 5th where HIMS reported their second quarter earnings, and I just want to run through very quickly some of the things here because it's going to lay a foundation for the conversation we're going to have for Q3 earnings. So last quarter, HIMS reported 315 million, up 52%, 13.3 million in the bottom line, and 39 million in adjusted EBITDA. Subscribers grew to 1.9 million, up 43%. And I just want to scroll down here. Here's what the company's expecting for the third quarter: 375 to 380 in terms of revenue. They're expecting 35 to 40 million in terms of adjusted EBITDA, and they're expecting 9 to 11% EBITDA margin. Now, HIMS, if we just go, I mean, you can't see this because it's on my iPad, but I'm just going to go to their history of previous earnings, and we're going to just take a look at whether they've beaten or not. What do you make of this? What do you think of this? Their guidance, I mean.
I mean, they always beat their own guidance, but here, I mean, they gave like a pretty strong guidance because it this implies like a 20% quarter over quarter growth, which is huge. I mean, it's like a very significant acceleration from the growth we've seen in the first and the second quarter, which makes sense because of the GLP ones, I guess.
Yeah,
But
it is
I mean,
significant. Yeah, go ahead.
I mean, they always beat, but here as the guidance was so strong, I'm afraid they might just. I mean, they will probably beat it. I mean, I don't expect different, but I'm not so sure if the beat will be that large as we're used to with hymns.
Mm-hmm.
Because also I've like 5 or 10 minutes before we started this, I went to see like the eligible states for GLP ones.
Mm-hmm.
And when they presented the Q2 results, which was in August 5th, I believe, they had, let me just confirm, they had 30 states eligible for GLP 1s. Then 1 month after, they were at 36 in September, so still in the third quarter.
Mm-hmm.
And then now, I just checked today, and they have 41. So what I hope to see here and like next week is mostly the guidance for the last quarter of the year. I'm really like expecting a strong guidance because they added like very important states just in the end of the third quarter, so we shouldn't see the complete effect of GLP-1s in the numbers. We will see a good effect because otherwise the guidance wouldn't be so strong, and they already had like more than 1 month into Q3, so we should see already like a significant increase in the weight loss segment. But I'm really looking forward to see what they're going to say regarding like the fourth quarter. So even if they don't beat these numbers by that much, I think the guidance will be raised again, like the full year, and mostly because of the Q4. And even like they said, they expected nationwide coverage until like the before the year ends. So probably the full effect of GLP-1s will be in the first quarter of 2025. So those 2 quarters are really what I'm most excited for. But obviously now we have to focus on Q3.
Right. So basically, what you're saying is that because they're eligible in more states now for GLP-1s, it's going to take time to ramp that up. And so Q4 is really what you're expecting on the back of that GLP-1 strength for them to raise their guidance.
Yeah, exactly. But they gave as I said, like a very strong guidance for the third quarter, and that's exactly why I'm so looking forward to see the guidance for the next quarter. Because if they rose, like if they gave these guidance for this quarter and they were like at half of the country, yeah, like it was 30 states when they released the results, but probably at the end of the second quarter it was probably at 20 states or 25, or I don't know, but not 30. So even with like 20 more states to go, they were pretty bullish. So I'm really excited to see what they have. Not only the numbers, but like the remarks and what they have to say about the Q4 so far. I'm pretty sure that analysts will like blow up like a dozen of questions about GLP-1s and what are they seeing in the current quarter, etc., etc. I'm not sure if you saw, but they released today a weight loss paper.
I didn't see. Maybe
like
you want to share your screen?
Oh, it's like a huge document, like 30 or 40 pages. So
it's like a scientific paper?
No, it's more like about the reviews of the customers and like some data. For instance, the highlights that everyone saw and were commented on X was that they said that the customer churn for GLP-1s after the first month for HIMSS was at 13%. And supposedly the estimates for the original GLP-1s are at 30%. So it's a pretty huge difference. But I also believe that not most of the difference, but a considerable part should be because of the pricing strategy they have. Because if you pay 1 month, it's like much more expensive than if you pay 3 or 6 or 12 months. Like because you have the prices from $200 a month, but the $200 a month are only for the full year package. So you have to pay like $2,400 for the full year right away, and I'm sure not that many people do it.
So if I'm looking at this paper, right, 30% of patients discontinue GLP-1 treatment after a month, and that number is only 13% for HIMSS.
Yeah, at least with the data they had so far.
That's really interesting.
That's very interesting, yeah.
Why do you think that is?
I mean, I think it's first. I assume that the effects of the drug itself shouldn't be that different. I mean, the core is there, the semaglutide is there. I think the side effect and everything. Because I don't know if you saw as well today, but let me just Check. Yeah, the FDA said that they made an inspection to Novo Nordisk facilities, and they
Right.
had a lot of issues and a lot of compliance issues, a lot of like undocumented processes, like incomplete records, gaps in quality oversight, like a lot of problems. So they were pointing out, oh, compounders cannot do this because it's not safe. Oh my god! And now they're just full of problems. So I think it's not really like about the quality, because yes, it's a strong medication, it's a strong drug, but I think the compounders can do essentially the same effect. So I believe here the differentiation is kind of how Hims distributes like the products, and how like the customer experience. You have several features on the app, like to motivate you, like to give you education about several factors about your health and your eating disorders. It's a bit what I told you regarding the oral medication that Hims has, and they have like
Mhm.
a complete set of features that altogether help you in staying focused and like really doing everything and every step of your treatment correctly. So here, at least it's I really can't find a different explanation, but I really think, as I said, that the pricing strategy has a huge effect, because I'm not sure how it works with
So
the original versions, but it shouldn't be that big of a difference like it is with hymns. Like just buying 1 month, I guess like probably just a small fraction of GLP-1 customers just buy the first month. I'm pretty sure most of them buy 3 or 6 or even 12 right away.
right. Well, so here's something else to consider, because if you're looking at this discrepancy of saying, okay, normally with GLP-1s, they discontinue after 30% discontinue after the first month, and then for hymns, I'm just going to mute you for a second. There was some static on your side, so I just muted you. And then for hymns, 13% discontinue. So there's a big gap between what people are experiencing on the hymn side versus what people are experiencing, outside. I think in addition to the branding and the experience with the app and whatnot, um, it's really a price factor, right? Hims is the more affordable solution. Hims is cheaper than other solutions. If I had something that was um, just more affordable overall, like I wouldn't be so pressed to cancel it immediately. Versus if I had a really expensive subscription, or I had to pay $500 for something as a one time, then yeah, I can't afford it. I'm going to cancel it if I'm not seeing immediate results. Um, but for Hims, it's more like, okay, like let's give it another month. It's not that big of a risk for me because I don't pay that much anyways.
Yeah, is the noise okay? No.
Yeah,
Yeah, exactly. And as I
yeah.
was saying, as I was saying, if you pay the first 3 months, like you're not going to like stay. You will give it a chance, even if the first month it's not that good or not
Mhm.
as you were expecting. So I really think I agree that most of it comes from the price and the pricing strategy.
Yeah, I mean, it's gonna be interesting to see how they transition these people, you know, uh, from that GLP-1 experience in 2025 after the shortage is essentially over, or like what their plan is. It's also interesting to me because I'm thinking about the cross-selling opportunities if these people enter the ecosystem for HIMS and only, one out of every 10 people is leaving after a month. Well, GLP-1s is massive for HIMS. It's their fastest growing business segment. And that's going to bring in a lot of people. That's going to then bring awareness for all of their other segments, right? If you go onto the app and I'm on GLP-1s, well, all of a sudden I'm going to be cross-sold all these other things. And so that's just in itself going to be very positive from um, just a member acquisition and a stickiness perspective.
Yeah, and they can always try to capture most like some of the GLP-1 customers to the oral medication, because they
Mm-hmm.
also talked a lot about it in the paper. Like they compared the weight loss with the oral medication and with the GLP-1s, and it wasn't that big of a difference. Obviously, GLP-1s are more effective. Otherwise, everyone would take a pill instead of injecting themselves. But I really think that most people undervalue the significance of the oral medication. And exactly the cross, like when you supposedly people don't want to take GLP-1s forever. I mean, they want to
Mhm.
lose the weight and stop. But most people can't really do it because once they stop, they regain most of the weight. I think that there were several studies regarding this, and I even know some family members that did it. Like they had GLP-1s for some time, they lost the weight, then they stopped, they regained the weight, and so it's kind of a cycle. So
Yeah.
I think what they can do is maybe try to push some of those guys to the oral medication and
Hmm.
say like use these pills as a way of controlling your weight or something like that. I mean, this is just a wild guess, but I think it would really make sense because I saw some Reddit reviews. They have like a subreddit for hers weight loss and for him's weight loss,
Hmm.
and I saw like a lot of people saying, "Oh, they told me to take the pills, so or like it wasn't really working that well for me, or I already achieved most of what I wanted to lose, and they told me to take the metmorphin pills or something like that." So I really think that's a possibility, and it would make sense in a way like of capturing the customers, as you were saying, because once they are in the ecosystem, they they will likely need other treatments, let's say.
So, just so I understand this right, you're saying that the company is pushing people for the oral treatments partially because they know that GLP-1s are eventually going to come off shortage and they're not going to be able to have non-oral treatments.
I mean, that's what I felt. I am not saying
Smart.
that they are doing that, but like for sure. But even in the section, they have a section in the weight loss paper, like saying very good stuff about the oral medication. So it's kind of ensuring people that okay, so yeah, we know that you know that we can't sell GLP-1s forever, but you
Hmm.
should know that we have a very good oral solution because they even talked about the timelines. Like in December, we released the oral medication and it was doing very well. We had thousands of good reviews, etc., etc., etc. So it was kind of both saying that our GLP-1s are safe, our GLP-1s are good and are effective, and we have even less churn than our competitors,
Hmm.
and also saying, but don't forget about our oral medication. It's also good, and it's also a very good solution for many people that don't like to inject themselves, etc., etc. And
Hmm.
even the conclusion is kind of I don't know if you saw my post today, but it's kind of sending a message to the FDA because they concluded by saying like a bunch of stuff about weight loss being a huge problem in the US, etc., and saying that our compounded medications are under strict quality control conditions in FDA regulated facilities, like really reinforcing that. And then
Hmm.
they ended with a sentence saying, it's more important than ever to put the needs of patients first and ensure access to weight loss solutions for all because we are in a nation's obesity crisis, etc., etc. So I really think this paper was to first go against what Novo Nordisk said about like stop, like they asked FDA to stop allowing the compounded versions. So I think it was kind of an answer to them saying, I mean, you can't do it because people need us and people need compounding companies. And also saying that we have huge, like, and very strict quality control tests, and we have really safety measures, and our drug works. They had a sample of 10,000 reviews, so I mean, it's minimally significant. So I really think the three objectives were bring more awareness to the oral medication,
Hmm.
show that they have a safe GLP-1 solution, and kind of send a message to the FDA. And I think the paper was very well written, to be honest.
Yeah, so I'm just pulling it up, right now. And just to confirm, this was a white paper that HIMSS themselves wrote and published. It was not like an independent third party talking about the whole
Yeah.
industry. It was like HIMSS was the one, who wrote this, which is kind of interesting, right? Because it's kind of what you want them to be in this space to be able to gain that credibility. Is you want them to be able to do their own research into weight loss, their own studies, their own surveys with customers, and to have primary research, right? To have their own conclusions that are drawn that then the industry can point towards to prove a point. I like that position for them because it gives them more credibility in the
Yeah,
market to say,
they're
"Hey, actually, we have a big enough sample size and we have these direct communication with our customers. Here's our own independent research that we're doing." Like it gives them more credibility in that, like from an academic perspective.
and it's important because they're probably the largest compounder. So
Mm,
they're probably the only compounder that has a good sample about the safety of the products and the side effects compared to the original versions, etc. And so I think they are kind of positioning themselves as the leader, let's say, in compounders, and saying, so we have literally more than 10,000 reviews. And I saw an ad because I think a month ago or 2 months ago they were paying people for these reviews. Like, if you had a good no, like if you had an experience with GLP-1s, we need you to do something, etc. So yeah, I think it was a good move. And I've seen before like dozens of LinkedIn roles like posted by hymns of people like looking for people to write this kind of stuff, like research papers about the industry, about a specific sector with many different objectives. So I think they will probably like work more in this field, or not only in weight loss but also in other
mm.
segments.
Yeah, there's two other things that I really want to get to just on this episode, and one of them is whether we think that there's going to be a new announcement for a new product. Like, I think personally that menopause is going to be my next guest. I think the Shepherd joining a couple weeks before and that news being made public is setting them up so that on the earnings call or next week, let's say, they actually have an announcement. You have somewhat of a different opinion. You think that they're going to save that news and keep it in their pocket for 2025 after the shortage ends, or end of the year, not necessarily, do it next week. Do we think that there's going to be anything in terms of new product announcement, something that, we haven't really been planning for, that has the potential to contribute to that beat, or not contribute to that beat, but contribute to that, high guidance for future quarters?
I have a wild guess. I
Please.
think I think they might announce Tears Appetite, like the Eli Lilly's GLP-1, because now they have semaglutide, and it's kind of
Mm,
the thing of hymns falling because of Tears Appetite, etc., etc. Because they said in the last earnings call that they were going to do it like soon, and they didn't so far. Probably because of all the problems with Eli Lilly and FDA, and then the compounder suing FDA, and then the FDA going back and reviewing the situation. But I really think it's not. I really think, but I have like a feeling that because Andrew has shown that he's kind of wild with this, and he doesn't care about the big pharma like hunting him. So, and that's a bit um related to what I was saying in the beginning. Like, they might have a crazy good quarter and then fall because of something in the earnings call. For instance, if they announce Tears Appetite, I think it's bullish. I mean, the first and the initial reaction from everyone will probably bullish, but I'm not
mhm,
sure if the market will like react positively or negatively, like they did like it did in the second quarter, because when
mhm.
he said the thing of selling GLP-1s after shortage and so on. But yeah, it's just a wild guess. They might
I just
announce other category, but it's
Yeah, I just think
really
the market is so misinformed when it comes to the actual, specifics. And it took me, a little bit. There's a ramp up time for sure, um, to understand, tirzepatide versus semaglutide versus, what's on shortage, what's not on shortage, what are the application methods, where exactly Hims plays in the space relative to other players. And I just think that the market just conflates everything together. And if something bad happens to, a Hims competitor, even though it's good for Hims, like they'll all fall as a blanket or they'll all rise as a blanket. I don't necessarily know if that's going to change in the short term. But I also find it interesting because I mean, just having also SoFi top of mind, right? Like I think that there's so opportunity in these misunderstood bull thesis or plays, let's say, because if the market is dropping Hims 10% because something happens with tirzepatide and Hims doesn't even offer tirzepatide, then all of a sudden that's an opportunity to buy, right? And we found that to be the case. We were proven correct because the stock fell, when it fell 10%, it was $15 a share, something like that, $16 a share. And, currently it's 22, 23. And so there is opportunities in these misunderstandings by the market just because like you have to understand that Wall Street are not pharma experts. Wall Street analysts are covering, 10 stocks, 20 stocks at the same time. They don't have the level of, time that we do to go as deep as we do because we make content on this stuff. Like it forces us to essentially be on top of it. They're like suits in Wall Street, like they're guys that wake up in the morning, put their suit on, go get their coffee and sit in a cubicle, all day long. They don't know anything about it's not like they have the Hims app on their phone or they use the product or they're looking at it, as in depth. And so I think that there's an opportunity there for companies like Hims, for companies like SoFi. And that's I think one of the things that draws me to these companies is because how misunderstood they are provides alpha for the rest of us.
yeah. But here, to be honest, I think analysts should do a better work with Hims because
Yeah. I
I
mean,
understand all that, and you're 100% correct. But with Hims and with SoFi as well, and with other stocks like widely followed by the retail community,
I just
because
I don't think it'll ever happen, man. Because look,
but that's
here,
good, and I agree with you. I just think that they should like it.
yeah, I
I mean,
mean, like, I
they
think I
really
should be a
have like
billionaire,
huge salaries, like they're
and
managing millions or billions sometimes. So
yeah,
I
like,
understand, and I'm glad that this happens, and this will keep happening. Otherwise, I mean, if the analysts were always correct and knew, like the market would be efficient, and we don't want the market to be efficient. To be honest, in the long run, yes, but I don't
so
want the
those are
market to
those
be
are
efficient.
conflicting things, though, right? Like, because on one hand, you say, okay, analysts should understand it, but if analysts understood it, then we wouldn't have the opportunity to buy Hims so
Yeah, yeah,
cheap.
yeah.
Um,
I
so
understand. So I think you're correct, but I really think that they should do a better work for at least.
they're
But
not.
I mean,
I just
I'm
don't think
glad.
that's like for small cap companies, analysts are never gonna. And I know we're agreeing here, right? But analysts are never going to do as much research because like I keep coming back down to that like Peter Lynch, quote of him basically saying, well, an analyst is incentivized to invest in the big established companies even after they've had their run up because they're safer in the eyes of the market. Because if I invest, I don't know, $100 million into Apple versus into Hims, if Hims falls, then it's my fault as the analyst because it's a risky investment. But if Apple falls, then it's Apple's fault because it's Apple. Like, how can I go wrong in doing what everybody else is doing? Like the groupthink is very strong in Wall Street. And so there's going to be a period of time where we as retail investors are going to take a chance on Hims because we're investing for their guidance, we're investing for their subscribers that they're adding, which we're going to talk about, we're investing for all of these new product announcements and the future that has a lot of risk baked into it. And then we get a multiple expansion, and then by the time that analysts and institutions jump in, like it's already up multiples from here. And so, I just think that is always going to be the case for small cap companies. And it's just it comes with the territory, right?
Yeah, you're right. The thing here is just like him specifically is so widely followed. Like there are thousands of people following it. There are dozens of creators like saying the same thing. Sometimes it's really boring. That I mean, even the Wall Street guys use X, and not all of them. Obviously, the old ones probably don't use it. But I think that over the next few years, at least in these mid caps, because IMS is not, I don't consider it as a small cap anymore. I'm now at $5 billion. I mean,
Mhm.
now in modern days, probably it's still a small cap because there are,
Yeah, it's tiny.
yeah, but it's kind of becoming widely recognized. But
Yeah, but
yeah,
it's interesting
even
as
the
well.
analysts are becoming like more bullish as the time goes on because they can't be silly forever. But yeah,
Yeah,
I think you're right, and that's good for us actually.
Manuel, like my point is that even the analysts who are on X and even the ones who do, more balanced work, let's say, who are more bullish, they're not incentivized to go out on a limb and put it like a $40 price target on this thing because like why would you stick out your neck like that?
Yeah,
Like if you stay with the middle of the pack, like the incentives of an analyst's job are essentially not to get fired. And how do you get fired is you get fired by being wrong in a big way, you know? And so this is why they all follow each other and they all follow each other, but then remove it one circle above, they all follow price, And if
yeah,
price goes
exactly.
to 40,
They
their
follow the
targets
price
go to
action.
40.
It's like
Yeah.
what happened with Transmedics yesterday, like the
Yeah.
huge drop, 30% drop. I'm sorry if there's any older watching this, but I mean, the day after, analysts all cut the price target, but the notes were like, "Oh, everything is fine. It was just a temporary issue." But then
Right.
we cut our price target from $200 to $100, like a huge price drop. But then the note is, it's fine, everything is fine. We were very surprised with the earnings call. The market share is okay. It was just a temporary problem, but we cut
Yeah.
the price target by half.
By 50%.
But I mean, yeah,
Um,
it's what you said. They can't be wrong by so much, so they're always following price action.
so the last thing I really wanted to chat through, and then we'll get to this question in just a second. But before we get to that question, I wanted to talk about subscribers. So subscribers came in for 1.9 million for Q2. And here I also want to talk about the percentage of the subscriber mix between personalized solutions and non-personalized solutions. Um, what do you think subscribers is going to come in for Q3, and what do you make of that mix between the personalized solutions?
Uh, so subscribers were 1.9, not 1.9, 1.8 something, and they've been increasing by like
43% year over year is the latest number.
yeah, but like quarter over quarter, they've been increasing like 10% more or less.
Yeah.
So it should
Two-
be higher than that.
2.1. It
So
should be accelerating.
yeah, exactly. So if they had 1.86 million
Hmm.
last quarter. So if we do it like the revenue guidance was 20% quarter over quarter. So subscribers, and let's assume that GLP-1 customers have a higher monthly revenue than the other ones. So probably the 20% increase in revenue, it will not be 20% increase in subscribers. It will be a bit less because the average
Right.
monthly revenue it's like $57 last quarter. Yeah, $57.
Yeah, that's going to go up as we get more GLP-1.
Yeah, exactly. So maybe they'll increase the subscribers like by 15%, something like that, quarter over quarter, which should put it at like 2.1, 2.15 million. That would be my guess, probably.
Yeah, that's the range that I was looking at, 2.1 as well.
Like between 2.1 and 2.2. most likely. And it would be, let me see how much increase year over year. Last year, third quarter was 1.426. So if it's like 2.15, it would be an increase of 50% year over year, which is pretty impressive.
Yeah, I mean, if they're accelerating their increase, then that's obviously very bullish, right? They're growing by bigger percentage numbers, right? They're as the numbers get bigger, you expect them to grow by bigger, numbers in general, but bigger percentages is much harder to do. Now,
Yeah.
what do you make of the percentage of the personalized solutions for Q3? Like, I think it's going to be 50-50 by the end of the year, basically. But is it this quarter or is it next?
In the last earnings call, Andrew said that the percentage of personalized subscribers is like the pace is increasing like every quarter. So I think it will reach 50% this quarter. Last quarter was 42%. The quarter before was 35%. The quarter before was 30%. So they like from the last quarter of last year and to the first quarter of this year, they increased 5.3%. Then from the first to the second, they increased 6.9%. So I believe they will increase like by 8 or 9%. So to reach 50 or 51 or 50, even 52%. Because it was very like, he talked about that like a lot, both in the shareholders letter and in the earnings call, that they want to reach like 80% or even 90% like in the short term. So maybe next year or in the year after, because now all the subscribers that come in are essentially going for a personalized solution because you don't pay more. So it really doesn't make sense for you not to choose it, I would say. If you have the option of doing a personalized solution versus not doing it and the price is the same, why would you not choose to do it?
Well, if you're only going for, I mean, that's a good question. I don't know what the answer is, but I would imagine like if you're only going for 1 month, for example, you would probably start out at the non-personalized solution. And then if you're going to be a longer term subscriber, like if you decide that, hey, this is actually the solution I want to go with, at that point, you would, personalize it.
Yeah, I understand, but I mean, if they say, because the claims are like, if you have a personalized solution, the objective, the primary objective, let's say, is to diminish the side effects of the medications, because it's not just GLP-1s that have side effects, like air loss treatments have side effects and all that. So if they say you pay the same and we're decreasing your side effects, let's say, like it's not like this, but let's say something similar, I mean, at least I would choose it. But I understand if you have to answer, for instance, if to get a personalized solution, I'm not sure what you need to do, but you probably have to answer a huge list of questions and something like put your medical records and all that. So yeah, I understand that some people choose not, and also about that, about the people choosing just 1 month or like multi 30-day subscribers. I have here the numbers, and last quarter 84 or 85% of the subscribers were multi 30-day subscribers, so more than 1 month. So just
What
like
was 85%?
85%.
Wow.
And that's mostly because of the savings that you have like by choosing longer term options, because like 3 or 4 quarters ago they started to do this when they, because at the beginning the business model was a bit different, and that's when they started to work with affiliated pharmacies. That's when the margin started to really increase for him. And once they got to like all the pharmacies they wanted to, they essentially started to use the cost efficiencies to decrease the prices of the longer term solutions, like the 3, 6, 12 month solutions. And so it really compensates for you to buy like a longer term solution if you don't plan to stop, or and for instance, with hair loss and with dermatology and with those treatments, you usually don't treat your condition in less than 30 days. So I think it's a really smart pricing strategy, and it's actually increasing a lot because last quarter was 85%. I said the quarter, like the same quarter the year before, was 77%. So it was like an 8% increase.
Mm-hmm.
So that also improves retention, like both the personalization and these
Well,
longer term solutions. I think indirectly affect the retention rates, I would say.
yeah, I think the moment that they add some level of slope to it, like the price decreasing over time, or the price decreasing the more you buy, then obviously we expect that number to go up. And all of it is positive, right? It all contributes to this stickiness aspect of having people stay in the ecosystem. Because if you have this statistic where, like, for GLP-1s, for example, only 13% are dropping off after the first month versus everybody else, it's 30%, then there is something about the experience, there's something about the price that people like, right? Because those are the differentiating factors, that the product is the same product essentially. And so if I can sell you a 3 month subscription versus a 1 month subscription, it's all the more time that you're exposed to the ecosystem that I can cross sell you other stuff for you to, get into a routine, for you to enjoy your experience more. And so, I do think that is all contributing to that flywheel of them acquiring new members.
Yeah, and then the new pills that they launch with the treating several conditions. It's
Hmm.
also like, for instance, if you have a customer in the hair loss segment and you
Hmm.
launch, which they did, they launched like a two-in-one pill for weight loss and erectile dysfunction. Imagine they just send an email to all the hair loss customers saying, "Oh, we now have a two-in-one pill for hair loss and erectile dysfunction. If you have the two conditions, we treat both, and you just pay a bit more because it's really a good saving, and they have a good pricing strategy for those multi-product offerings." I think it's they're trying to build, because we talked about this before. It's like an industry with a considerable churn rate, but I
Right.
think they really try to do small things, but that really make the difference in the retention rate. And they always say that in the earnings calls, like, we really need to improve retention rates, and that these differentiating factors are mostly what contributes to that, in my opinion, obviously.
Hmm.
I'm seeing now they have a, yeah, they actually, in the last earnings call, they said that they expected to launch more two-in-one pills and all that, and they didn't launch that many things. I think just one more, but maybe they'll say something about it.
Well, yeah, I remember seeing somewhere. Um, I believe that might have been their Q2 presentation, where they have the roadmap for product launches going into the end of the year, and they talk about something like that.
Going to the end of the year,
Yeah, is
maybe,
it their May investor presentation where they're talking about it? Let's see.
or maybe in the shareholders lecture.
Maybe. Yeah, maybe that.
Probably.
But
The shareholders letter always has like very good stuff. Because last quarter they didn't even launch or posted a new investors presentation for the
mhm,
first time. Yes, but I mean, the shareholders letter is more than enough, to be honest, and it's even better.
right. Yeah, I'll find it. But they gave guidance, essentially, is what I'm trying to say, on the new product launches, and in particular the personalized solutions of mixing and matching stuff. So um, I think that's going to be fairly bullish. So we've run through revenue, we've run through the predictions for subscribers, for guidance, GLP-1s. what do you make of? Is there anything else like on their other segments? Because we've talked a lot about GLP-1s as one of the main drivers for them being able to beat their numbers. And we've talked about some other thoughts that we might have around new product announcements. Anything else that you want to cover?
This is still related with GLP-1s, but it's important because I think most people, most people know about this, but maybe they don't think about it when it comes to predicting the numbers. But I think we will see some pressure on the gross margins because of GLP-1s, because we saw it in the last quarter, even with like just 5% of revenue coming from GLP-1s, it was already enough for us to decrease 1% in gross margin. Let me just confirm, but I think it was, from 81% to, or 82% to 81%. So I think we might decrease even further to maybe even 79% or something like that because of the weight of GLP-1s. And the long-term target has always been mid 70s, so they're way above that. So I don't see it as a problem, but it should be noted because everyone is like, oh, Hims will always increase margins. They're always increasing margins. And I mean, yeah, they're proven more than in like several times that the operating leverage is massive and they're doing a great job there. But if they want to enjoy like the huge growth of GLP-1s, gross margins will inevitably fall. But this doesn't mean that net profit margins will fall, because for instance, in the last quarter, even though the gross margin decreased by 1%, the net income margin increased like slightly from 4% to 4.2% or some. Yeah, exactly. From 4% to 4.2%. So I'm not saying the free cash flow margin will decrease and the net income margin will decrease, or even the EBITDA margin will decrease, but gross margins will probably decrease. And earnings, I think the analysts are expecting, because they don't give guidance for earnings per share, but analysts are expecting 5 cents in GAAP earnings per share. And I mean, over the past 2 years, maybe, 2 years, I guess, they have always grown the earnings per share quarter over quarter.
They're expecting 5 cents?
Yeah, they're expecting 5 cents. I checked.
I saw on investing.com that the expectation was for 10 cents EPS.
Maybe that's non-GAAP.
Oh, I see.
I'm not sure, but I think I checked.
They've doubled EPS for the past 3 quarters. They've doubled EPS expectations. Like last quarter, it was 4, and they came in at 6. The quarter before, it was 1 cent EPS, and they came in at 5. And the quarter before that, it was negative 2 cents, and they came in at 1 cent.
Yeah, exactly. So they had 6 cents last quarter, right? Yeah. So I don't expect the number to decrease. And even if it decreases, it will be to 5 cents. So I'm not expecting at all a miss in the earnings per share. And they might even do like 7 or 8 cents. I was like modeling a few numbers this afternoon, and it's really possible, even 7, 8, 9 cents. It really depends on the beats in revenue. Because one thing we didn't talk about was the buyback program. I think they will probably they announced that they finished the $50 million buyback program in the last quarter, and they opened a new $100 million. And I also have a feeling that they will probably say that most of the buyback program was already used, and they might even expand it, to 150 or to 200 million or something like that, just to try to give a bullish idea to the market. because it's not really that relevant at this point to spend 50 or 100 million dollars in shares. I think it's nice if they don't need it to grow, which
Mhm.
it's what it looks like, because they're accelerating a lot, even though they released a buyback program. And Andrew said that they're generating more cash than they need to grow, and that's why he's doing it. And also the dilution is a bit, it's one of the worst factors about HIMS. They dilute a bit, but it's mostly like to retain employees and all that. So I think it's part of building the corporate culture they're building. Sorry, but it's good that they offset that through the buyback program. So I'm expecting him to maybe, or if they haven't yet finished it, I think they probably added a considerable amount of shares when it was at 15, $16 or so, because the other buyback program was with an average cost of $12, so it was
Hmm.
pretty
I mean,
nice.
they're up double compared to that. So, and the
Yeah,
stock
exactly.
is close to the all-time highs. I don't, what's their buy? It's 200 million over 5 years.
No, it was 100 million. The
100
last,
million over 5 years, right?
I'm not sure about the 5 years, but let
Or
me
three
see. Let
years.
me see. I have here. No, I don't have.
It was over several years for their buyback program.
But I mean, they said the same thing about the previous buyback program,
Hmm.
which was a 50 million. Yeah, $50 million. And like in 1 or 2 quarters, they used it all. I think they really buy the dip, to be honest. Because when it was almost at the peak of pessimism, I started to see like huge spikes in volumes, in the volume sometimes, and I was like I even said it, I guess, on X, that it should be, but I'm not finding the buyback programs programs thing. But yeah, it's not really relevant, and I think the market doesn't give that relevance to the buyback program. It's just Andrew flexing the cash.
Yeah, I mean, it's a double-edged sword, right? Because
Yeah. I mean, they
people are
probably
going to
could
say,
use the
why
money in
aren't
a
you
better
investing
way.
growth?
Yeah, in marketing or whatever. But
Yeah.
I really think it's just Andrew like wanting to say we have cash, we don't need cash. Like we're printing cash, we can do whatever we want. Because I mean they're growing 60% and they can even buy back shares even at such an early stage. Because he said that he's not like losing, let's say, growth because of the buyback program. He said it's just like a way of not having that much cash on the bank, as they don't have any debt. They never had debt, which is kind of crazy. So I think it's just a way of flexing it, to be honest, and saying that the business is going well and we're printing cash, but it doesn't really bothers me.
Mhm. Um, okay. Well, are we doing a live earnings call for HIMS next week? Are you going to make me wake up at even earlier than 7 in the morning next week? Is my question.
I mean, we can maybe at the moment the earnings will go out, which is
Mhm.
like at how much in the US? 4 p.m. right, Eastern
So
time.
yeah, I
Uh,
think it's
pro-
I think it's 4 and the call's at 5, right?
Not
So I
sure.
think that if the results come out at 4, actually, wait, I have their investor relations page like literally open in front of me right now. Let me just double check for you.
But we can listen to the earnings call. Yeah, I will.
Yeah, so I think that the actual numbers are going to come out at 4. Let me just double check. So the call is at 5 p.m. Eastern, and which means that the numbers are probably going to come out like 4:15, 4, 4:20, whatever. I think if we hop on maybe like 4:45, 15 minutes before the call, then
Yeah, that's what I was going to suggest. Like a bit before the call, we discuss the numbers, and like
yeah, it'll
when it comes out, I want like a bit to digest it, like at least
yeah,
half an hour or something. But then we
that yeah.
can watch the earnings call live and like comment it after.
Okay, that's a good idea. So yeah, because I want 30 minutes or so to just read the report and read the
Yeah,
numbers myself.
and probably they will have a shareholders letter as well, which is always full of information.
Mhm.
So I would like to read it before.
Yeah, I'm probably going to take the time for an extra 30 minutes of sleep personally, but
Yeah, do it.
Okay. So essentially, the earnings call next week is at 5 p.m. Eastern. We generally do this show at 6 p.m. Eastern. So next week we're going to have the call instead of the show, or the call in addition to the show, however you want to see it. We're going to start at, let's say, 4:45.
Yes, I think
15 minutes before the call, and then listen through the call, and then just talk about it afterwards, and do an extra long show next week on. Well, I guess it's going to be on Monday, not on Tuesday. I keep saying
Yeah.
Tuesday because somebody corrected me on X, and I'm like, dude, it is fucking Tuesday in Asia, but it's Monday in North America.
Yeah.
So
Poor guy living the Asian life now.
I know, yeah, poor guy. Okay, cool. Thanks everybody for joining us for the Hymns Weekly podcast. I think we're getting more and more people every episode, which is great.
Are we?
Kind of. But join us next week on Monday at 4:45 p.m. Eastern Time Zone, where we will be covering the hymns live stream on this channel, listening to the call and doing analysis after the fact. And we will see you there. See ya.